Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about SoFi Technologies' SoFi stock. In this video, we will be analyzing 3 articles, to where the first one is titled, Chief Risk Officer Aaron Webster sells 215,299 shares of SoFi Technologies Inc. So we're going to be going over why this really isn't a big deal, and how insiders sell stock for a plethora of reasons, but there's mainly only one reason why they buy shares. So we're going to be going over that news update as well as another article titled SoFi, the breakout approaches in 2024. This article goes into detail about how right now is the last chance for investors to get into this stock at a cheap price point before they become profitable, and they are anticipated to become profitable during this current quarter, meaning that you have at maximum another 3 months, and then you may never get this company at a cheap share price, but after that you may never get the company for a similar share price like it's trading at right now. And clearly we're going to be going over their price targets and price predictions, and then to round out the video we're going to be discussing how SoFi is approaching their critical inflection point and why this company is going to surge so high once they become profitable despite a potential pullback. So for more videos on SoFi Technologies, SoFi stock, don't forget to go and annihilate that like button right now. Go ahead, press it right now, subscribe if you are new, don't forget to become a member of this channel for as little as 99 cents per month, because that's what keeps me here on YouTube. But if not, don't worry, by subscribing you're going to get this content for absolutely free. And with that being said, I say let's jump right into today's stories. SoFi Technologies, as you already know, is a fintech company or a financial technology company that essentially operates as a digital bank. And recently, Aaron Webster, who is their chief risk officer, recently sold 215,299 shares of the company. Now, many investors are taking this out of context and saying that this guy has lost faith in the company, that he is no longer supporting SoFi Technologies, and that he is selling all of his shares, but this is very far from the truth. First, let's talk about his role within the company and why he sold shares. The chief risk officer is responsible for managing the company's risk exposure to ensure that the company's operations are in line with their risk appetite and strategy. Essentially, he's trying to make sure that SoFi is making safe moves so they don't overexpose themselves to unnecessary risk, which could lead to the company filing for bankruptcy. And so far, this guy has done a phenomenal job considering the very impressive financial health and stability of this company. And like we said earlier, he sold around 215,000 shares, which added to the total number of 415,299 shares that have been sold in total over the past year regarding insiders. However, if you see on screen, we can see multiple insiders buying and even some insiders selling, but overall, we see a lot more buying than we do selling. So although this gives us somewhat of a mixed sentiment, overall, this is very positive because there have been more shares bought than shares sold according to insiders. So what does this mean for the overall share price? Well, at the time of this insider selling, the price was around $8.08 per share, which gave the company a market cap of around $7.17 billion. However, this particular insider didn't just willy-nilly decide to sell. Insiders sell for a plethora of reasons. Maybe they needed money right now. They were strapped for cash. Potentially they could have needed this money to pay off a debt. Perhaps this was already in a contract somewhere where he would sell shares at this particular time right now, or when it reaches a certain share price. We don't know for certain why he sold, but there is a plethora of reasons why insiders sell, and really only one main reason why they buy, and that's because they believe that the future share price is going to be greater than their current share price, which is very positive news considering that we have seen a lot more insider buying than insider selling. So although this can be interpreted in a multitude of ways, overall, bears, naysayers, and critics are taking this out of context, and they're really trying to make a mountain out of a molehill here because this is not really bad news. Now, it would be bad news if this risk officer ended up releasing a statement that he is leaving SoFi or he no longer believes in the company, but of course nothing like that came out, so that's why bearish naysayers and critics are taking this news and completely running with it while overshadowing the millions and millions of dollars worth of shares that have been bought by insiders insiders over the same time period. So again, if you hear any negative news about this, honestly, they are blowing this out of proportion. Next up, let's talk about SoFi and their future share price. Currently, it's trading at around $7.23, while the analyst that I could find believes this company could surge up to $15, while on the other end, we see analysts who believe this company could fall to around $3 per share. Now, for me, I think this company is at minimum worth between $9 to $10 right now, and as we anticipate this company to grow over the long term, they could clearly surpass that estimate. We also want to highlight very good things that we've seen from this company over the past few quarters. For instance, SoFi has achieved their 10th consecutive quarter of record revenue. So literally, they have beat on their overall revenues quarter after quarter after quarter. And the main reason for this is due to their diversification of their revenue sources and their expansion beyond what traditional banks and legacy banks can offer their consumers. They also added, as you know, around 717,000 new members in the third quarter, and this is going to help SoFi approach their break-even point early in 2024. However, we know from management that management has actually anticipated that they will break even in quarter 4 of 2023, which is the quarter we are in literally right now. That's why this author and the next author believe that this could be your last opportunity to get into this company at a cheap share price between $5 to $7. Because once this company becomes profitable, they are going to scale their overall share price very impressively. Clearly on this channel, we have had a high conviction for SoFi shares, advocating to buy this company around $5. So if you've listened to that, you are sitting on a lot of profit right now. But again, we don't want to over allocate and take on unnecessary risk of potential losses through purchasing more than a 5% initial portfolio allocation to any singular risky growth company, including SoFi. Now, the good news here is that SoFi stock should remain as a long-term investment opportunity for long-term investors, because this company has been one of the best stocks to trade or invest into over the past year. So clearly investors need to hang on to their SoFi shares, at least their core position, but feel free to take some profits off the top, especially after very abrupt surges. Because after an abrupt surge in their overall share price, after a catalyst, we know that the company will pull back in their overall share price. So feel free to take a little bit of profits off the top when that happens, and then reinvest back when the company pulls back in their stock price. But the reason we advocate to hold a core position would be that this company is still in their early stages of a long-term growth journey, and this is very evident based upon their quarterly earnings report. So now let's discuss the metrics that you need to be aware of as an investor. First, we want to look at their top-of-the-line growth acceleration, which means we are going to look at their sales and revenue, which came in at approximately $537 million, which equates to a 21.7% year-over-year increase, which crushed management's guidance and expectations. They beat their estimates by around $22 million. So it's not like SoFi barely beat estimates, they crushed analysts' forecasts. And this also means that this could lead to profitability, which is going to be more impressive than current projections. We've also seen continued loan growth demand despite higher interest rates, which is very odd. You would think that as interest rates rise for various loans, that the demand for these loans would go down, but that's not what we're seeing for SoFi. Now, we are seeing this in other banking institutions, but for some reason, we've actually seen loan growth demand despite higher interest rates for SoFi, which is a huge competitive advantage. And we anticipate going forward further strong growth overall, but it really just blew us away that SoFi is outperforming these larger legacy banks. But it really blew us away how SoFi is outperforming these large legacy banks in this regard, and how they are continuously taking a market share and disrupting the entire banking space, despite this company not yet breaking even. But as management has said, in quarter 4 of 2023, which is the quarter we are in right now, we are anticipated they will break even during this quarter, and from that point forward, they will have sustained profits, meaning that their share price, since this company will now become profitable, investors will take this as a great opportunity to buy into this company, especially risk-averse investors are going to pour into this company, because now this company is much safer than it was before, considering that they are profitable, or will be profitable. We also saw deposits grow by $2.9 billion, equating to a 23% increase in quarter 3, up to $15.7 billion at the end of the quarter. And we also saw their personal loan originations come in at a record $3.9 billion in quarter 3, which was up nearly $1.1 billion or 38% year over year, and this is just more phenomenal news. SoFi is also benefiting from the fact that the student loan moratorium has ended and repayments are resuming, and this is increasing their student loan origination volume, which was $919 million in quarter 3, representing a 101% increase year over year from their original $462 million. So jumping from $462 million up to $919 million clearly shows that SoFi is getting back on their student loan refinancing products and services, which is not only benefiting former students, but also this company in general. Now, while the company is moving towards GAAP profitability, I do want to highlight and make you aware of a bearish negative note, which investors do need to know, because it's not just all sunshines and rainbows here. The company expects to increase their share-based compensation and also have more depreciation and amortization. And although share-based compensation is not unique to SoFi and it's very common in other technology companies, this is going to weigh on the company's overall stock, as well as what investors think of this company. But with that said, we also know management raised their guidance for their top-of-the-line revenue for it to be between somewhere around $2.045 and $2.065 billion on top of very good EBITDA. But the main takeaway here is that yes, they are growing their revenues very rapidly. They're anticipated to become profitable in the fourth quarter, but they are also doubling down on their stock-based compensation. So this is what you need to know. If you can accumulate shares at $7 or below, that would be a good buying opportunity for someone who wants to get into this company. If you have an average cost basis of $7 or lower, then you're doing very well, because this company is anticipated to achieve a $9 to $10 stock price, which will be a sustainable stock price between those estimates from now on, which should take place after they become profitable. So as the company continues to deliver on their revenue and earnings beat, this puts this company in a very positive light, and I can't wait to see what this company makes of themselves in the future. So with that being said, I would love to hear your thoughts down below about how high you think SoFi Technologies will go after they become profitable in this quarter. Don't forget to annihilate that like button right now, subscribe if you are new, don't forget to become a member of this channel for as little as 99 cents to support me personally, because that's what keeps me here on YouTube. And with all of that being said, I will see you in the next YT video.